Hello guys, what's going on? Welcome back to my channel. So in this video I'm going to be sharing with you an interesting entry model which I promised to share with you in the previous video that I dropped. So if you have not watched this video that I dropped previously, you have the opportunity to go and check out the video, then you'll be able to follow up with whatever I'm going to be sharing with you in this video, right? So now this is a strategy I've already taken my time to drop series of videos on. So if you have not watched the kingsfx marksman strategy, you can go back and check out the video, but here we are going to be focusing on entry model. In this model I'm going to be sharing with you how you can take a trade with this strategy, be you a scalper, a day trader, or a swing trader. So we are going to start with a swing trader. All right, so if you're a swing trader, you have our entry zone, which is our order block. The price have retraced into the entry zone, so we just have to wait for a bullish signal. All right, we look for just one bullish signal, which is a bullish candle, and before we start thinking of making entry. So this is our entry signal right here. As a swing trader, all we have to do is to go long at this point, set our stop loss at the low of this particular candle that swept liquidity. Okay, so we push to this level, okay, and we are going for 1:3 for this particular trade. Okay, we are going for 1:3, as you already know. Okay, so this basically 1:3. So this is exactly how you can enter this trade as a swing trader. Okay, so we can just play out and see what the price be able to do. Remember, you're a swing trader, that means you are holding your trade for like a day, 2 days, or 3 days and all that. So this is like more than 24 hours into this trade, or the next day the price is still playing around and all that. This is the third day taking this trade, all right, or holding this trade. You can just see how the price have been pushing. So unfortunately we couldn't hit CP yet. Okay, so in order not to waste time, I will just fast forward this to see whatever the price does. It can actually take more than 3 days, 4 days for you to hit your TP, but that's exactly what swing trading is all about. So let's see how it goes. So as you can see, this is the current price right now, and the price after about 5 trading days, okay, the price is still not at our TP level. The price have not hit our TP. So this is swing trading for you. You just have to be patient if you want to swing trade. If you want to hold the trade for a very long time, that means you have to be very patient. You have to wait. Most time you are going to be safe. Your SL is not going to be triggered easily as a swing trader, because your stop loss is going to be a little bit far away from your entry, right? Because you have a good budget. You cannot be swing trading with just $10, $50. I think you need to have a good amount of money for you to swing trade. So that's my own perception about swing trading, right? So now I'm going to also share with you how you can take this trade as a day trader. How do you take this trade as a day trader? All right, so a day trader simply opens a trade within the day and closes within 24 hours, right? So now if you are a day trader, you are to enter here. So your SS should be the low of the order block, okay, the low of the order block, because we are buying. Then your TP is still going to be 1:3. So 1:3 is the minimum for this particular setup. So now we have our 1:3, we have our SL below here. We just play and see whatever the price is going to do. So at this point, you can see that we hit our TP at this point within 24 hours, right? So by now you are done with trading. All right, finally, if you want to take a trade as a scalper using this setup, it's very simple. You still need that same signal, which is buying signal at this point. Now when you get your bullish candle, you are going to use the same entry. Okay, now the difference here is that instead of setting your stop loss below this level or below your order block zone, you use that current candle, that your signal candle. If you are buying, the low of the bullish candle, okay, for your entry is where you are going to be setting your stop loss. Okay, you can see this low, that's where I set my stop loss. Let me zoom in so that you can see clearly. So here becomes my stop loss as a scalper. All right, so my TP still maintain, we are still going to maintain 1:3 as our TP level, which is this zone. All right, so all I have to do is to play on so that you see exactly what happened. So you can see within few hours, about 2 hours or so, the price actually hits our TP, right? as simple as ABC. It took close to 24 hours for us to hit our TP as a day trader. Okay, it took few hours, like 2 hours or less than 2 hours, to hit our TP as a scalper, and also it's taking more than 5 days for us to hit our TP as a swing trader. All right, now the question is, why on earth should I be, if I can actually, because the entry is actually the same thing. Okay, what is the difference now, taking a trade as a scalper, taking a trade as a swing trader, and also as a day trader? Now the difference here is the stop loss level. Now the problem with scalping is that when you are scalping, you are likely going to be hitting your stop loss more than when you are swing trading and when you are day trading, right? So the people who are like the patient traders, which are the swing traders, they are likely not going to be hitting their stop loss easily, because their stop loss is going to be below this protected low, okay, at this zone. So probably they are not going to hit their stop loss easily, okay. But a scalper can actually take multiple trades, okay, a lot of trades, and also your TP will easily be hit, all right, but your stop loss will equally be hit easily. That's the difference. All right, so let me share with you another example using gold. So this is another example on gold. All right, so if you look, the price is breaking structures towards the upward side. At a point, the price swept liquidity, which you can simply see here. So after that sweep of liquidity, you mark your order block, you wait for the price to break structure again, retracing back to our order block, we are to buy. But if you look at if you observe the way the price is retracing back, you can see the price is coming back impulsively. So you have to be careful making your entry. So at this point, you want to see a good bullish candle or bullish engulfing candle before you make your entry. So we just play on to see if we can get a bullish engulfing candle before we buy. So at this point, we have a bullish candle, but because of the way the price is kind of retracing back, okay, so we are having impulsive move instead of corrective move. So we have to be careful making this entry. We needed one more bullish candle that we engulfed the previous one for us to make entry, right? So we play along to see. So at this point, you can clearly see that we are having two hammer, okay, bullish reversal candlestick right here, which is a very strong signal. So once you have this, we are going to enter first as a swing trader, right? So swing trading, we are going to make our entry here. Our SA is going to be this low, which is the protected lows. Look at this low. That's where we are going to, our stop loss is going to be. So our TP is going to be 1:3 as usual. Okay, so this is our 1:3 right there. So we play ahead to see how the price is going to react. All right, so at this point, we actually hit our TP for swing traders. Okay, now the next entry is supposed to be for day traders, right? So as a day trader, we are still going to make entry the same place, right? So our entry is the same place, but our SA is going to change, right? Our SA is going to change. But I want you to observe something. If you look at where this particular candlestick closes, it closes within our order block, right? So, and the proper place to set our SL is the low. Can you see this low? The low of our order block, right? The low of our order block, if you are entering as a day trader, right? So but if you pay close attention to this price action, you can see that the price closes within our order block. So you can either use that particular zone, okay, or you still use the low of this candle. So you can either use the order block, all right, or use the low of this candle. So let's use the order block for us to see what will happen. Okay, this is the low of the order block, okay, and we are going for 1:3. We are not exceeding 1:3, guys. So let's see. So this is 1:3, okay. So this becomes our entry as a day trader. So now at this point, we have not hit our TP yet, right? So let's see what happened. So now at this point, you can see it hits us out. We are taken out, okay? We are taken out. So now the next thing we are going to be doing is to make entry as a scalper, right? Based on our entry model. So we have this bullish candle. We needed one more confirmation, and now we got our confirmation. So we are still going to make entry the same place. Now we are going to be using the low of this candle, entry candle, the low of the entry candle, and our TP is going to be 1:3 as usual. So now we have our TP, we have our stop. Let's see what happens. So if you look closely, you can see we still hit our stop before our TP. So this is exactly what I was talking about in the when I was showing you example with Euro USD. Now if you look here, we made entry with swing trading. We were able to hit our TP without hitting our stop. We made entry with our day trading model, entry model. We hit our stop, and as a scalper, we still hit our stop. So the advantage here, if you are using swing trading, is that you are likely not going to be hitting your stop easily, like when you are trading with day trading model, entry model, or scalping, right? But at the same time, you can equally make profits, okay, when you enter as a scalper, when the price can easily push to your direction, maybe reverses and hits, take stop losses of swing traders or day traders, right? So it all depends on your the kind of trading you enjoy. All right, if you are the type who loves scalping, just stick to scalping. You don't need to be a day trader today, be a scalper tomorrow, and turn to swing trader the next day. So if you are scalping, keep scalping. Use the same model, don't change anything. If you're a day trader, keep trading daily the way you trade and use the day trading model. And if you're a swing trader, use swing trading model. So the whole secret for this particular entry model is that if you are not comfortable with this, you can switch to this, you can switch to this, and once you switch to one, you maintain using it throughout so that you will get consistent results, right? So guys, I hope this is helpful. I hope with this entry model you'll be able to apply it even in other strategies that you use. You're actually going to be seeing results. Okay, so I hope this is helpful, and I'll see you guys in the next one. Bye for now, guys. Don't forget to subscribe, like this video, and share. The link to my Telegram group is in the description of this video, so you can join my Telegram group for free. Bye for now, guys. Enjoy.